Welcome to Mark Arnold's Finance. I have a great video for you guys today. We're going to be talking about Rivian, which is a new electric vehicle company to the market. It's a very exciting company, but it's had some negatives. Since its IPO, its stock has gone down massively. It's also had a huge slowdown in the production of its vehicles. It's also important to mention that big companies like Amazon and Ford have invested in this company, and one of them is pulling out. So is this company one that is a good investment right now? Or should you avoid this because it's dead in the water? We're going to cover all this today in my video. Before I get started, if you're new to this channel, be sure to subscribe. I'm somebody that's transparent. I'm going to provide regular quality content. I'm not just going to disappear someday. I'm here for the long run. I want to grow my knowledge. I want to become wealthy, and I feel this is a journey we can all do together. So be sure to subscribe. Now let's get started. Rivian. This is an electric vehicle car company that's made for the adventurous person. They are also said to be one that can challenge Tesla someday. They make two cars right now, or shall I say two vehicles. One is the R1T, which is a truck. This was the first electric pickup truck to the market, and it came in starting about $68,000. They have an R1S, which is the SUV. That comes at about $73,000 starting at its price. They are also known for very cool features. So the truck, for example, has a camp kitchen. This is a kitchen that literally pulls out from the middle of the truck, and you can use it on the go wherever you are. So for campers like myself, this is very cool. This company went public on November 10th of 2021, so it hasn't even been a year yet, but their stock is down nearly 90% from its all-time highs. Yes, you heard that right, 90%. I think it followed the IPO trend of the last 2 years where there's a lot of hype in the first month or two, and then it follows a downward death spiral that just keeps going down and down and down. So why has this stock suffered so much? Well, it's due partially to earnings, but also to the slowdown of its production. So we're going to talk about these two things. First of all, their earnings. They missed revenue. They came in at $95 million versus the estimate of $130.5 million. They made a net loss of $1.59 billion, which equated to a loss per share of $1.43. They also have negative free cash flow of $1.45 billion, so that means they're spending more than they're making. And these are things that a lot of investors look at. It's not something I look at though when it comes to a startup company, because financials are going to be all over the place. They're having to put out massive expenses to grow and expand. So I don't focus so much on that with startup companies, more about their growth. And as mentioned, they have cut production recently. In 2022, they're expected to produce 50,000 vehicles. That was cut into half, and now they're expected to put out 25,000 vehicles by the end of this year. So what's going on there? Well, it's mainly due to the supply chain constraints and the shortages of such things as the chips. So this is something that is affecting all car companies, but especially Rivian, because it's really trying to get itself out to market. So as far as growth goes, there is some healthiness there because their vehicle reservations is at 90,000+ vehicles and just 10,000 extra reservations since March of 2022. So this is excellent. This is what I focus on rather than the financials, is the growth of their product, what they're going to be known for, and they are, they have a lot of reservations. So I think their growth potential is huge there. As mentioned, the supply chain constraints and the shortages are a huge issue. In fact, the semiconductor chip shortage is their most painful constraint currently, and it's only led to them being able to produce 5,000 vehicles since their beginning of their production last fall. So literally, they are saying that they are getting in a few chips and making the vehicles right away. It's that crazy. So only 5,000 vehicles. But it's good to note that this is not a demand issue, it's a supply issue. So the demand is still there, but of course with the China lockdowns, a lot of the chips come out of China, and the Russia-Ukraine conflict is providing other shortages, but also increasing or adding to inflation, which is going on, which is adding to the expenses and costs that this company is having to put out, which is creating additional pressures. So as I mentioned, the demand is good, but it's going to be a while before they can start fulfilling those orders due to those constraints. And they're going to be fulfilling them, but at a healthy pace is what I'm talking about. So because of that slowdown in their production, that's going to create risk because a lot of the customers can become unhappy waiting and they can cancel their reservations, and then other companies then have the opportunity to grab that market share. So that's something important to mention, and it'll be a long time before this company is profitable. Electric vehicles is a very expensive business, and it takes a long time before you start selling enough vehicles to bring in that revenue that is above expenses, above the outflow of all your costs. So it'll be a while before they're profitable, but again, I look at more so the product growth than their financial growth at this point. As companies get more established, that's when the financials to me become more and more important. Not to say they're not important, but it holds a lighter weight for me where the growth of the product is a higher weight. So Rivian currently has a factory in Illinois which has the capacity to put out 150,000 vehicles, and they have a new one in Georgia that's about to open that has the potential to make 200,000 vehicles by 2025. Again, I like to put my weight on the growth of things, so they're opening up new factories, which is important. They're gearing for that growth. And Rivian's goal is to make up 10% of the electric vehicle market by 2030. That would be huge and give them a good competitive advantage. But there are some other issues that I see with investments and competition. So as mentioned, Amazon, they own 18% of Rivian, and Ford owns 11%, or they did, because Ford is selling out part of its stake in Rivian. In fact, they sold 8 million shares recently. Ford, I think, is starting to cut their ties with Rivian. They still do hold about 86.9 million shares of Rivian, but they're starting that process of selling shares, and I believe for a legit reason. But due to Rivian's stock plunge and their negative earnings in first quarter 2022, it created Ford to report a $3.1 billion loss in their first quarter 2022 financials, and it created Amazon to report a $7.6 billion loss in their first quarter 2022 earnings. I just bought a share of Amazon. I'll put a link below of my video on Amazon and why I'm so bullish on it. But after their earnings is when I bought, because that Rivian investment did create that net loss. And so I believe that was a great opportunity to get into Amazon. But that's another story, another video. Be sure to watch it. It's in the description, the link. So I can see why Ford sold Rivian, because it is already a car company and it's becoming an electric vehicle company itself. And it started delivering its F-150 electric vehicle Lightning trucks on April 26th of 2022. Now, Ford is the undisputed king of trucks. We can see this here in this snip, and it's not just in this year, but in many of its years of its history, it is the king of trucks. It holds that top market share, and I believe that there's going to be no difference with their electric vehicle trucks to keep holding that crown of undisputed king. In fact, when Ford released its pre-order, when people were able to go on and pre-order the electric vehicle Ford Lightning trucks, they had to shut that down because the pre-orders were going crazy, and now it's caused a massive backlog of over 200,000 orders. So a great sign for Ford. And you know, this truck also is getting great reviews. I went on YouTube and I love to look at vehicle reviews, but it's getting great reviews already. So in my opinion, Ford does not need Rivian, and they probably see that themselves. It was probably an investment in case their trucks didn't take off, but since their trucks are looking like they're going to be highly successful, I can see why Ford is pulling out, taking that money, investing it in their company, and those losses that they make can offset, you know, taxes or something else. So I do think Ford has a reason to sell, and it's not really a negative thing on Rivian. But on a side note, there's also other competition out there besides Ford. There's GM, which is going to start releasing their electric vehicle trucks in 2023, and Tesla, hopefully, will release their Cybertruck in 2023. They keep putting that off year over year, year after year. So we'll see if Tesla delivers on that. But mainly, all car companies are going electric at some point in the future. So there's massive competition that Rivian has to keep in mind. So Amazon owns 18% ownership. Now, Amazon's a different company that's invested in Rivian for different purposes. They ordered 100,000 Rivian electric vans in 2019 that they're going to use for their fleet to deliver their products. And Amazon, it's also important to note that they aren't just getting electric vehicles from Rivian. They're getting electric vehicles from other companies like Stellantis, I believe that's how you pronounce that. And this isn't a negative for Rivian. It's really Amazon diversifying and saying it's their way of not putting all their eggs into one EV company. And that is very smart, because if Amazon only had one EV company it depended on and something went wrong, that would be bad news for Amazon, where they're really dependent on getting those orders out quickly. So Amazon is also using pre-production Rivian vans with certain Amazon employees in a certain location to test them out. And so these employees are giving feedback and saying, here's where we need some improvements. So they're doing this testing phase, which is great. That's just, I think, very important. So when these vehicles are out there, they're really tested, and they're going to provide great performance for all the other employees as it expands out for Amazon. So Rivian, as I mentioned, is putting out 25,000 vehicles, or producing 25,000 vehicles in 2022. Of those, a third, or 8.3 thousand, will be for Amazon, the electric vehicle vans. So those will soon be hitting the streets, I believe, the second half of this year. So that'll be exciting to see that. So my exposure to Rivian is through Amazon. So keep that in mind as I provide my closing remarks. My exposure to Rivian is through Amazon. And again, I bought Amazon after the bad quarterly net loss due to Rivian. But this is also important, I think, because this is Amazon's opportunity to be a part of the electric vehicle market. This is a very high growth opportunity, the electric vehicle market. So we see, Tesla, Ford, GM, they're all putting it all in, Volkswagen, all these car companies. And so this is Amazon getting a share of that, right? Because they're not a car company, but they can buy part ownership, or someday maybe even buy Rivian out 100%. You never know. They did mention, and this is important, that they are still committed to their Rivian investment and usage. So I think that solidifies for any Rivian investors, or maybe someone that's looking to invest in Rivian, that if Amazon is committed still, that's a great sign, right? That shows that they are very confident in Rivian. And it's very, you don't bet against Amazon, right? They're a pretty big company. They do a lot of R&D. And so I think this is a great sign. So I feel that with the first quarter 2022 Rivian losses that, kind of spread out to Ford and Amazon, I do think that's a one-time thing at that level. I still think they can have some losses in the future, but I do think things are turning around for Rivian, because we see that the demand is still strong, which is a good thing. That's a check. We see that Amazon is still supporting and committed, so that's a check. And Rivian said in their earnings report that they feel that they have now made it through the worst of the shortages, which is good. So hopefully production can start, increasing, and they can put out more than 25,000 vehicles maybe this year, and put out a big forecast for 2023. So the ugly of Rivian is that if you were an early investor, this stock has gone down massively. Remember, 90% from its all-time highs, so you're probably deeply in the red. And I feel for you. That's hard. I have some stocks myself that I bought and then they've dropped off. Facebook is one of them, but I think that one will turn around pretty quickly. The bad with Rivian is the slowdown in the production. These are things that are outside of their control. The China lockdowns, the geopolitical Ukraine-Russia issues, inflation. So a lot depends on how their relationships are, on how these things turn around that are out of their control. So that's the bad. But the good is they have strong demand, which shows that their future can still be bright. They can have growth. They can have profitability someday in the future, and maybe be that competitor to Tesla. So for me, I feel that Rivian should turn things around within the next year or two. I still think that once we hopefully start seeing these vehicles out on the road, that'll spur other people to start buying. I know Tesla, for a long time, we heard about them, but we didn't see them on the road. And then I finally started seeing them driving on the roads, and then boom, they're everywhere now. I feel the same thing can happen to Rivian. So I do feel that this is a good opportunity to start investing in Rivian if you like their business and did your research. But keep in mind, there's some things that are out of their control, out of their hands. So there could still be some pain going forward until the supply chain constraints, those other chip maker companies start ramping up their own production to a point where we have that confidence that this won't be an issue going forward. There can still be some trouble and speed bumps for Rivian, but I am optimistic that with Amazon being committed and having 100,000 vehicles of just Rivian orders themselves, that this company will be highly sought after by the consumer, by companies like Amazon. Who knows what other companies, once they see the success with Amazon, that might say, hey, we want to order a fleet of vans ourselves. So yes, that's what I think. I think that Rivian still has a potential bright future, that if you're going to invest in it, I would do maybe 2% of your portfolio if you're wanting to take a bet on this company. Me, myself, I do think Rivian will turn around. I think it's a little too risky within the next year or two. For right now, my exposure is through my Amazon shares, because Amazon does own 18%. So if Rivian turns things around and does good, that's going to benefit Amazon stock. So that's how I am approaching this. But let me know what you think of Rivian. If you would order one of their trucks, go online and look at their reviews. They're actually good themselves, not just Ford Lightning trucks. Rivian has some great reviews too. I think they're pretty cool. They have a lot of cool features. I do think this is a truck and an SUV that we'll see on the roads within the next couple years, kind of like we saw Tesla just kind of boom, they're everywhere. So I do think this is a good investment. Unfortunately, it wasn't one that was good if you bought within the last year, but I think now they're kind of towards the bottom. They can still go down, of course, but I think the upside now is higher than the downside potential. So that's my opinion on Rivian. Let me know what you think. Thank you guys for joining me on this video. Have a great day, and we'll see you next time on Mark Arnold's Finance.